governmental
Welcome back to our channel
investigations,
Quick Learning.
significant events occurring
So
after the
now
balance sheet
our
data,
topic of presentation
specific
is
customers
supply
that
versus
account for
quantity
a large
supply.
portion of
So this is
revenue,
a very important
and
topic
finally,
for all the
unusual
economics
transactions
students and
and
the business
related
students.
party transactions.
So
So,
in this
these are
topic,
some
I will tell you
examples of
about
the
the
items
comparison chart, their
disclosed.
key differences, and finally I will conclude my
So, in
presentation.
addition to the basic financial
So
statements, accountants must
supply
prepare notes to the
implies the
financial
quantity of a
statement. The
commodity
purpose of the
which
notes is to explain
suppliers are
certain
ready to
times,
offer for sale
items, or
at a
transactions
definite
to the
price
reader.
over a period.
So
In other
basically, the
words,
first note
supply
is
is
usually
what
a
the
summary of
supplier is
significant
able
accounting
and willing to
policies.
offer for
For
sale to the
example,
customer.
JJ's Lawn Care would probably
But
disclose
in
that straight line
contrast, the quantity
depreciation was
supply
used to
implies
determine
the amount of a
depreciation
particular
expense.
commodity
So in
that
my
the
previous
firm is
video,
willing
I
and
briefly
able
explained
to
the
make
example
available
of
for
JJ Lawn
sale
Care.
at the given
I told
price
you about
at
how
the
to make an
given
income
period.
statement, balance sheet,
So, the
profit
seller
loss
of the
statement,
product represents the
statement of
supply side
retained
of the
earnings.
commodity. This may include
So,
firms,
the notes
governments,
also
or even
explain any
individual
unusual or
producers.
infrequent items that
So
may
the
be of
terms supply
interest to
and
the
quantity
reader.
supply are interrelated
So,
concept
almost
in
all major
economics.
corporations
This
have a note
content attempts to
disclosure about
explain the
pending
difference between supply
litigation.
and quantity supply.
So, I will explain and put the
So
description,
basically, this is
the
a
link of that
two
video of the first
graphs
part
which
of accounting
shows you
cycle in the description.
about
So, the second
first there
purpose
is an
of
increase
this
in
video is
supply
to
and
explain the
secondly
purpose
decrease in
of
supply.
closing
So
entities
on the left
and
hand
how
side
to
as you
prepare
see
these entries.
quantity supply.
So,
First of
closing the
all the
temporary
quantity
accounts.
was
So, basically, close revenues
Q1.
accounts to income summary, close
For
expense accounts to
for
income
Q
summary,
demand the
close
supply
income
is
summary
this
accounts to retain
and the
earnings,
higher price.
close dividend to retain earnings,
But then
and the closing
if more
process gets
quantity
the
is
temporary
supplied,
accounts ready for the next accounting period.
then the
So,
price remains
once the
same.
financial statements have been prepared, the books are closed and it's time to get ready for the next
So there is
accounting
an increase
period.
in supply,
So the net income is earned over a
and
period
if
of
there is
time,
a decrease in
and at the
supply,
start of a new period, we want
first of
all
all we
revenue and
have
expense
this
accounts
supply.
to
Then
have
we
a
have
zero balance,
supply
so we
S1.
can start recording income in this
So our
period.
supply decreases.
So the closing of a company's books is a four-step process. So now I will
So
explain the
comparison chart.
four-step processes in
So basically the
following.
meaning of supply is that
So
supply
step 1
implies
is
the
to
overall
close all revenue
relationship
accounts to a temporary
different
account called
prices
income
and
summary.
quantity supplied at
Then
each
step
price.
2 is to
But the
close
quantity
all expense
supplied is the
expense
amount of a
accounts to the
product
income
offered
summary
for sale
account.
in each period at
So
a
at this
particular
point,
price.
the net
So
income
supply
is
represents how
isolated in
much
the
the market
income
can offer.
summary.
But the
So
quantity
the step
supplied is the
3
amount
is
of
to
goods
then
made
close
available by the
income summary
producer
to retained
when
earnings.
receiving a certain
So
price.
net income transfers from
So,
income summary to
supply
retained
reflected
earnings
that the supply schedule or a
and
supply
zeros
curve,
out income
but the
summary.
quantity supply reflected
The
a
income
point
summary
given
account
or
never
supply
appears in
curve.
the financial statements.
So,
So the fourth
the
and the
change
final
is
step
the
is to
result
close
of
dividend to
supply,
retain
so
earnings.
change
Net
in
income is added to retain
non-price
earnings and
determinants.
dividend is
But in
subtracted from the
quantity
retained
supplied,
earnings.
it is a
So
change in
this
price.
updates retain earning.
So, in
So this is
supply,
a
change is
four-step process of
indicated by shift
how
of
to close a
entire supply
company's
curve.
book. I
But
hope
in
you
quantity
understand. If you have
supply,
any
change is
query, then
indicated
kindly
by
comment
the
me. I
movement
will
along the
answer
supply
you.
curve.
So now let's prepare the closing
So finally,
entries
a key
for JJ
differences
Lawn
between
Care.
both of them. So supply is the basic
So
concept in
closing the
economics.
temporary
It
accounts.
implies different
So on my
quantities that
left
the
hand side
producer
there
is
is
willing
the
to
JJ
sell at
Lawn Care
various
service adjusted
possible
trial
prices.
balance
But
for
a
May
quantity
31,
supplier is the total
2007.
amount of commodity which
So the
suppliers will
cash is
offer at a particular market price.
3,925, account receivable is
So, supply
75,
represents how
tools and
much the
equipment
market
is
can offer at a different price.
2,650,
But in contrast, the
accumulated
quantity supplied
depreciations for
represents
tools and
what
equipment is
amount of commodity
$50,
producer
truck
will
is
supply at a
$15,000,
specific price.
then for
So the supply schedule or
accumulated
supply curve
depreciation for
indicates
truck
the
is
supply of the commodity,
250,
whereas the
notes payable
quantity
is
supplied is
13,000,
affected
accounts
by the
payable
point given on
150,
the supply
capital
curve.
stock is 8,000,
So the supply
dividend
curve
is
tends to
200,
shift when it
sales revenue
encounters a
750,
change in
gasoline
non-price
expense
determinants.
50,
This
depreciation
influences the
expense,
supplier's
tools and
willingness to
equipment is
sell the
50,
product.
then
So
depreciation
non-price
expense of
determinants
truck
may
is
include the
250.
cost and
So
technology,
total
price of related
addition
goods,
of
future
both of them is
expectations about prices, size of the
$22,200.
industry, number of
So
sellers,
I
weather
told you
conditions,
about
etc.
the
On
assets
the
should be in a
contrary, a change in the
left hand
quantity
side
supplied
and
is the result of the change in
liabilities,
the price of the
and
product.
equity should be in the right
So a
hand
shift
side
in
on
the
a balance
entire
sheet.
supply curve indicates a
So
change in
both of them
supply,
should be equal at the
whereas
end.
the change in the
So
quantity
all of the
supply
accounts
results
that
in a
must be
movement
closed are
along the
highlighted on the
supply
adjusted
curve.
trial balance shown here.
So
dividend, sale
finally, I will
revenue,
conclude my
and the
presentation
three
by
expense
that
accounts.
the supply
So
of a
when the closing
commodity
process is
depends on other
complete, the
factors
retained
also.
earnings account will
And
have
these
the
factors are
proper
natural
balance.
factors like
So you have
man-made
not
factors,
noticed that there is
infrastructure,
no retained earning
facilities,
accounts
and
because the
firm
company
goals.
was started in May.
So that's
So
all
now
from my
let's get
side. If you
started
have
by
any
closing
questions, then
sales
kindly
revenue.
comment and kindly subscribe to my channel. Thank